Look at the mid-caps, down about 60 odd points.
The mid-cap index is down close to about 1%, with the mid-caps underperform and the bank Nifty higher by around 0.7%.
Mid-cap index is now back in the green. At one point of time, we thought that, it's going to collapse and it was showing signs of weakening. It's going to be a positive close. The Nifty is closing above 20,050, a gain of 63 points. Hello and welcome to Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Reema Tendulkar, and these are the headlines for the day. A late recovery on Dalal Street. The Nifty ends above 20,000 mark for the first time. The mid and the small caps recoup losses after yesterday's sharp fall. Tech major Oracle's shares suffer the worst single-day drop in 2 decades. Weakness in cloud business spook investors on Dalal Street, as cloud is the fastest growing segment for Indian IT companies. RBI announces sweeping changes to how banks must account for the mark-to-market losses and profits they make on the bonds they hold. The new rules, which become effective next April, are expected to boost the growth of bond markets. Bharti Airtel hits a record high. Bata corrects after Citi initiates a sell on the stock. Campbells IPO opens for subscription today. Indigo is under pressure as engine issues continue to weigh. Crude prices hit a 10-month high. Floods in Libya, output cuts in Kazakhstan due to maintenance work stoke fears of supply disruption. Last week, Saudi Arabia and Russia had announced that they would extend voluntary production cuts to the end of this year. And let's get to the first headline, and that's the market. Well, markets recovered from their intraday lows to end higher. The Nifty ends well above their 20,000 mark for the first time ever. The recovery was led by financials. The PSU Banking Index went close to its record high levels. The index itself, the PSU Banking Index, rallied close to 4%, while the Nifty Bank was up 1%. The midcap index saw a recovery of close to 1.5% to end in the green with a gain of 0.2%. Surbhi is here with a wrap of the day's action.
Well, midweek and bulls were back dominating the street, and we have our first ever close above the 20,000 mark on the Nifty. Well, the recovery was quite interesting to note because the morning was very wobbly, particularly for mid-caps, and we were wondering if we'll have more of that selling that came through yesterday. But no, that was not to be, because things really turned around 11:30. And that's when the mid-caps took off and large caps also saw some additional buying. So let's complete the large cap picture first. The buying was led by banks, and that was the expectation, has been the expectation in the market. Bank Nifty was soaring away, a gain of almost 1% today. Large cap banks pretty much across the board, HDFC Bank, Kotak, you name it, SBI, cutting across both ownership, which means private sector, and PSU, and market capitalization lines. A good move on most of these banking names. Other Nifty gainers included the likes of Coal India. That rally resumed today, 3% up, one of the best performing stocks on the Nifty. Grasim had a fair amount of green, and Bharti Airtel had a good day. It's hit that 900 mark now. Quite a dream run for Bharti Airtel over the last couple of sessions as well. The losers were, some of the auto names like a Hero Moto, Mahindra & Mahindra. There was some profit taking. HDFC Life was lower, and L&T cooled off after the recent run on the stock. Now let me talk about mid-caps. Now in mid-caps, one thing to note is that while the rally resumed, railway stocks are still a little subdued. They recovered from the lows of the morning, but they didn't quite, manage a positive close. RVNL, IRCON, IRFC, these are names that still had some negative red around them. But as I said, financials is where the action is. So whether it's PSU Bank stocks or private sector names, your likes of Central Bank of India, PNB, look at Bank of India, look at RBL Bank, J&K Bank, all of these stocks were sizzling, 5, 7, 8% kind of a rally going on. And the story really of the mid-cap recovery is in the advanced decline ratio. When we started, the lines were crisscrossing. There were a huge number of stocks on the declining side. But by the time we closed, the advancing stocks were almost 2,000 and the declines were limited to less than 1,000. So very strong recovery in mid-caps. Let's see if it can last.
Surbhi, thank you very much for that. So what sparked this roller coaster ride in mid and the small caps over the last 2 days? There was speculation, unconfirmed reports on liquidation by a large hedge fund. So what are dealing rooms saying about the broader markets, the recovery that we saw today, the fall in yesterday's trade? Nimesh is here with the details. Nimesh.
Indeed, a sharp recovery for the markets, and that was led by financials and the pharma stocks. But within financials, it was a PSU Bank stock which had a huge move and then back of very strong buying traction as well. So the PSU Bank index ended more than 3% higher. But the bigger story was the recovery in the mid-cap and small-cap. There was a sharp sell-off yesterday on the back of that unconfirmed reports of a liquidation by a leading hedge fund. In fact, the fund manager under question today actually denied all the allegations and threatened legal action as well. Sources tell us that the particular fund had a very small exposure in the broader markets. In fact, the total size is not more than $300 million as far as the mid-cap and small-cap exposure in India. And given that there is such a strong domestic flow, we saw a sharp recovery in today's trade. A lot of the stocks have recovered from yesterday's fall, and looks like that big scare of a hedge fund liquidation seems to be at least done and dusted for the time being. Back to you.
Thank you for that. Let's get to some market opinion. Mihir Vora, Director and Chief Investment Officer at Max Life Insurance, said that a big dip in the markets yesterday is not a cause for concern.
You know, the speed at which the small caps had gone up over the last couple of months, something like this was waiting to happen, I would say. But I don't think it's anything unnatural or, unexpected, because, stocks are up 50, 60, 80% in a month. So 4 or 5 or 10% correction is to be expected. And if you notice the numbers, frankly, it's not the institutions, neither the domestic institutions nor the foreign institutions who've been driving this segment in the last couple of months. It's mostly been the domestic retail and HNIs. And, when a certain stock goes down by, say, 5 or 10%, there is a follow-up liquidation of positions. It happens. I don't think it's very unusual. And yesterday's move is nothing to be worried about, I would say.
Okay, let's get to the second headline then. So banks did well in trade, but IT stocks, they were providing support till yesterday, but today they came under pressure. Well, the news is that Oracle Corp, which is listed in the United States, declined by 13.5% yesterday. It was the single biggest fall for that share price in more than 2 decades. I think since 2002. It's a, 11-year fall on that, a 21-year fall. The key reason for that is the slowing cloud revenue growth for Oracle. Oracle's cloud revenues increased by just 30%. This is lower than the 54% increase that it had in the prior quarter. So analysts are concerned that cloud revenues is slowing. So what impact does it have on Indian IT companies if Oracle's cloud revenues slow down? Well, Indian IT companies are helping most of their clients transition to cloud. So they're transitioning to the cloud services provided by the likes of, Microsoft Azure, AWS, or Oracle. So if Oracle is reporting a slowdown in revenue growth, it means the work for the Indian IT companies on their cloud services also slows down. And cloud has been the biggest driver for the earnings growth for the IT companies. So there is that a little bit of a worry in the minds of investors where the cloud revenue is slowing down. And that's the reason why the IT stocks today slipped a bit in trade. But let's move on now to the third headline. The Reserve Bank has removed the 90-day ceiling on the holding period for securities held by banks under the held for trading category. This is a part of its revised guidelines on categorizing investments by banks. Lata joins in with more. Lata.
Yes, that's right. The Reserve Bank has announced new rules that will govern how bonds owned by banks will be valued at the end of the quarter or at the end of the year. These rules are going to be effective only from April 1, 2024, so for the next financial year. But the rules have been rewritten in such a way that they will provide a very big impetus to banks owning bonds. And so it's a big fillip to the bond market that is expected. Now, before I delve into the main announcements which impact bond markets, we must know that all investments are held by banks in 3 categories or 3 buckets. One is called HTM, held to maturity, which you own till the bond matures. Then is an available for sale category, which, the banks can sell those bonds. And a third, well, actually there is an FVTPL, but more relevant for us is an HFT category or held for trading category. Those are bonds which have to be sold or traded within 90 days. Now, how the rules of valuation have changed for all of them. First, the held to maturity category. At the moment, there is a limit. Banks can hold only 23% of their total deposits in the form of HTM. This limit goes under the new rules. Now, originally, the limit was there because, banks were forced to hold about 18-19% of their deposits in government securities, SLR. And so since you have to hold it, RBI gave the dispensation that, okay, you don't have to mark it to market, you have to hold it to maturity. But now, the same facility is available for any amount that banks want to put. So the expectation is that banks will want to own more bonds or give loans to corporates in the form of bonds rather than loans, because you don't have to mark to market. The next is that in the HTM category, once you said held to maturity, it was valid only for a year. Actually, every year you could take a call and remove bonds from the HTM. Now you can't do it except with RBI permission. A third change in HTM, it includes now corporate bonds. Until now, only government securities were put in the held to maturity category. Now, corporate bonds can also be put again, which encourages the fact that banks may give more loans via bonds. Now, let's come to the AFS, available for sale category. Here, the valuation, whether it is a profit or a gain, used to go to the P&L as of now. In the new rules, it will have to be a capital account adjustment, so it won't hit the P&L. Banks have to create an investment reserve, an AFS reserve, and that has to be deducted or added depending on the profit or loss they make. The important point is, even if bond prices fall, the P&L will not be impacted, and that again is expected to encourage banks to hold more, give more loans through the bond route rather than the loan route. And finally, we come to the HFT, held for trading. That has to be mark to market. But at the moment, if you make a loss, it has to be reflected in the P&L. If you make a profit, it is not. The Reserve Bank is rewriting the rules to say even profit can be taken to the P&L. And this is important because very often they buy a bond and a swap to hedge the bond. The swap is mark to market, but the bond cannot be, the profit cannot be taken. That used to create an imbalance, and banks used to resist, giving loans in the form of bonds. Now that discomfort is removed. Expectation is that the derivatives market will pick up because of this change, and in general, the bond market will get a boost.
Lata, thank you very much for that comprehensive analysis. We'll get into a break, but stay tuned. We'll be back in a jiffy with the other headlines. Welcome back. You're still with us on Markets Today, and let's get to the fourth headline then for the day. And this is a compilation of all the big movers. Now, Bharti Airtel hit a record high in today's trading session. The stock zoomed past 900 rupees. In the last 1 year, the stock has gained 15%, and in the last 5 years, it's been a 250% jump in the stock price for Bharti Airtel. Now, we were just doing some number crunching. Now, Reliance Jio had launched 7 years ago on 5th of September 2016. So pretty much 7 years ago. So we thought it would be nice to know how Bharti Airtel has done after Reliance Jio's launch, since considering that there was so much anxiety, there was pricing pressure, there was an industry disruption. Well, what happened after Jio's launch? First, prior to Reliance Jio's launch, Bharti Airtel's ARPUs were closer to 200 rupees. Then, on account of pricing pressure and the disruption, the ARPUs halved. From 200 rupees, we came down to 100 rupees of ARPUs for Bharti Airtel. But in the last 5 years, the company has been taking various steps to climb back above the 200 rupee mark on ARPUs, and ARPUs in the quarter gone by finally hit the 200 rupee mark. And that was quite a milestone for the company. In fact, the company has also reiterated that ARPU of 200 has been hit, but their goal is to get to ARPUs of 300 rupees over the long term. Now, taking a check on how the other quarterly metrics have done in the last 7 years. While the top line growth has looked good, the company's margins have improved quite significantly. The EBITDA margins for the company, 7 years back were about 42%, and now they've come to 55%. Part of it is on account of that IUC cut, which the government had initiated. The subscriber growth has been steady, in part led by the weakness of Vodafone Idea. But I think the biggest heartening factor is that, Bharti Airtel is back to where it was in terms of ARPUs before Reliance Jio had launched, and the 200 rupee milestone has been hit, and the company has done it via various steps with the help of the upgrades from feature phone to smartphone, upgrading from prepaid to postpaid. All these are ARPU boosting steps. The company has upped pricing, sometimes entry level. They've even upped 4G pricing. They've taken the first step, the lead in raising their pricing. They've simplified their international roaming. So the company's taken a lot of steps, and it's finally borne fruit as the ARPUs have hit that 200 rupee mark. But the other one, which didn't have such a good day, was Bata. It slipped 1.5%, and Citi has put out a sell call on the stock. And they're a bit worried about the market share loss by the company. Nimesh is standing by with the details. Nimesh.
As you rightly pointed out, the stock is under pressure on the back of that Citi note. They've initiated coverage with a sell rating and a target price of 13.10, a potential 24% downside from current levels. Now, Citi says that while Bata is the largest footwear retailer, the company has lost market share due to subdued performance. In fact, they've seen 0% volume CAGR over the past decade. If you look at the revenue CAGR for the last 5 years between FY19 to 23, they've just reported 4%, and which is the lowest among all the four listed Indian footwear players. In fact, while the valuations are looking attractive now at close to 45 times on FY25 price to earning, the key concern is if you look at the reverse DCF, that implies a 17% growth CAGR for the next 10 years. However, the company has only reported 11% CAGR in the last decade. So, while the street is excited about the tie-up with Adidas going forward, at least from a growth point of view, the company is lagging growth, and that's been a biggest concern, and hence a sell rating and a target price of 13.10, a potential 24% potential downside from the current levels.
Nimesh, thank you very much for joining in. Campbells IPO kicked off for subscription today. It's a near 2,000 crore IPO. The subscription opened today, but it closes on the 15th. That's Friday. This is a company which makes cables and wires. Surbhi joins in with the details. Surbhi.
Thanks so much for that. So, as you mentioned, Campbells IPO opens today. The price band is set at 1,035 rupees per share. The offer size is 1964 crores with 1784 crores for an offer for sale, and the remaining 180 crores is going to be a fresh issue. Out of the 180 crores, 136 crores is going to be used to reduce their debt. Now, post the IPO, the promoter shareholding will come down to 63% from 66%, and TPG Holdings stake will reduce to 5% from 17% currently. Now, it's a wires and cables company with presence in the FMEG space as well. They have 7% market share in the cables and wires space. Of the 89% of the revenues that comes from the wires and cables, 70% comes from wires and 30% comes from cables, and 11% of their revenues comes from the FMEG space. They have the highest contribution coming from the B2C channel, approximately 74%. Now, when you look at the financials, the numbers are pretty strong. The revenue for operations for FY23 was 5,600 odd crores with an EBITDA margin of 5.8% and a PAT margin of 3.4%. They've grown their revenues at over 30% in the last 3 years, EBITDA at 16% and PAT also at 16%. Now, when you compare it with their peers, it's on the margin front that they are lacking. Campbell's margin is just 6%, whereas peers like Polycab, Finolex, KEI all have the margins between 7 to 13%. So when you look at the valuation, Campbell's is valued at 54 times FY24 PE, which is higher than even Polycab's current valuation. Polycab's is valuing itself at FY24 PE of 47 times. KEI at 41 times and Finolex as 25 times. So the valuation seems pretty expensive as of now. We also spoke to the management about the growth opportunities in the cables and wires space. So let's listen in.
Okay, thank you very much for that. That's about Campbells, where it's in competition with the likes of Polycab, which has done very well. Let's move on. Indigo slipped close to about 2%. Engine issues continue to weigh in on Interglobe Aviation. RTX has said that several aircrafts worldwide could be grounded over the next few years due to problems with Pratt & Whitney's engines. Remember, 136 aircrafts out of Indigo's total fleet of 316 are powered by Pratt & Whitney engines. Sonia joins in with the key details and what it could mean for Interglobe Aviation. Sonia.
Well, thanks a lot for that. Indigo continues to be in focus on the back of the engine issues that Pratt & Whitney is facing. Now, RTX, which is the parent company of Pratt & Whitney, has come out with a statement where they've said that several aircrafts worldwide could be grounded over the next few years owing to the problems that Pratt & Whitney engines are facing. At the moment, the statement from RTX is that they've provided an update with respect to the A320neo engine inspections. They see a removal of 600 to 700 engines that power A320neos by early 2024. RTX earlier this month said that 200 engines would be removed, and most incremental engine removals required will occur in 2023 and early 2024. Now, due to these supply chain issues, Indigo currently has about 40 aircrafts that are grounded. Out of their total fleet of 316 aircrafts, 136 are powered by Pratt & Whitney engines, and these engine issues could put pressure on Indigo. Indigo has guided for a high mid-teens capacity growth in FY24, but they've also said that they're working very closely with Pratt & Whitney to assess the potential impact that this engine issue could have. Apart from that, Indigo is also facing headwinds on account of higher crude. Crude prices are now at a 10-month high of $92 a barrel. If you remember, on the 1st of September, oil marketing companies hiked jet fuel prices by 14% to 1.12 lakh per kiloliter in Delhi, and ATF prices have seen a rise of nearly 24% in just 2 months. Hence, that would have an impact on the earnings of Indigo as well. And now, the incremental Pratt & Whitney engine issues is something that could continue to keep a lid on the stock.
Thank you for that. Let's get to the fifth headline, and that's from the commodity space. Crude prices hover around a 10-month high after supply fears spooked the street. Prices rose 2% overnight, and this was largely driven by a temporary supply disruption caused in Libya, which has been hit by a deadly storm. That's not all. A production cut by OPEC and an anticipated rise in demand further pushed up prices. Manisha is here with the details. Manisha.
Well, yes, $92 a barrel is a new 10-month highs for the crude oil prices. We have seen 2% of gains overnight, and with that, we are 9% on the higher side on a month-on-month basis as well. The crude price is also taking a lot of support from the supply concerns that we have seen into the markets. We already have been reacting to Saudi Arabia and Russia cutting output by 1.3 million barrels per day till the end of 2023. Add to that the fact that we also have seen concerns come in from Libya, which has shut 4 east export terminals due to a storm. And then there are concerns also coming in from Kazakhstan, which also has cut output going forward. That is because of the maintenance issues there. We also saw an OPEC report yesterday, which is still talking about a strong demand in this year and the next as well. For 2024, they're looking at a target of around 2.25 million barrels per day of a global demand growth coming in. Now, when you look at 2.25 and then you compare that to the EIA report that we have seen, that also shows a 2024 demand increase, but that is barely by about 1.7 million barrels per day, while OPEC is talking about 2.25. But when you look at the last 2 or 3 years, we have seen constant gains come in for the global demand growth, and that is something that the street will wait out for on what IEA also has to take. In the meanwhile, US is going to be an important number to watch out for. Here as well, we have seen a constant increase in production, even if by smaller margins, but from 2022 to where we are right now and the expectations of next year, which would be a record high. That's the kind of supplies that the street is looking at. As I said, we are also watching out for more data to come in. This is a report card in the meanwhile on what the crude prices have done in this year. We started the year with 82 and then saw a sharp decline up to $71 a barrel as well in the month of June, holding at a 10-month highs right now, 2023 highs as well, $92 a barrel. It has been very strong gains in last couple of months, one-way rally. Actually, in last 2 months, we have seen the prices gain up by nearly 18%, and the markets do anticipate the momentum to continue on the higher side. This is what the markets are anticipating or looking forward to today. You have IEA numbers coming in and the US inflation data that would set course for the next direction.
Thank you, Manisha, for that. And with that, it's a wrap on this edition of Markets Today. Stay tuned for more news and updates.